Hello everyone, this is Pig Money trying to find out if Bitget is ripping me off. In this video, I will investigate how much Bitget is charging me for trading on their platform. There are different categories of fees that occur depending on what type of trades I'm running and how I fund my account. Some of them are obvious, others, well, not so much. I will compare the numbers with the fees of other exchanges as well, just to see if the prices are above or below market standards and if I am really being taken for a ride or not. If you have ever been wondering why your profit is not as much as you expected, or you're just simply suspicious about the fees that are being paid to Bitget and you want some clarity, this video is for you. As a bonus, I will also explain how to reduce or completely avoid the charges. The category where most fees are charged is futures trading. Here we have three different costs to keep in mind. We have maker-taker fees, funding fees, and the spread. All trades which are happening on the derivatives section of the platform will entail either a maker fee or a taker fee. The difference between them is how the trade was placed. For example, if I set a limit order in advance for a specific price level that I want my trade to be executed at, the allocated USDT funds will be set aside and locked in the market until that price level is reached. Essentially, I have added liquidity to the market. In other words, I was a market maker. If I place a market order, which is to be executed immediately, it means that I take liquidity away from the market, therefore I am a market taker. Most of the times, exchanges want to incentivize traders to conduct their trades based on limit orders, as they will add liquidity to the order books, and they usually do this by applying lower fees for makers and higher ones for takers. The default fee at Bitget are 0.02% for makers and 0.06% for takers. Now, this cost applies in both directions for opening and closing a position, so the total after each closed position is 0.04 and 0.12% respectively. Needless to say, I have to multiply it with the leverage used to get the nominal value of my real cost. So if I make a $10 taker position at 50x leverage, my cost will be 30 cents for opening and the same for closing it, therefore 60 cents in total. It means that if I close my position with less than 6% in profit, my net balance will be negative at the end. So if I'm trading manually on futures and I want to reduce the costs that are associated with my positions, I usually set a limit order which is really close to the actual price level. This takes some practicing to master because obviously if there is volatility in the markets, the limit order might not get triggered in time. Unfortunately, when it comes to copy trading, apart from the master trader commission that is payable after each profitable trade, all the transactions are basically takers. As there is a market order to be executed in a split second, there is really no time for waiting. Anyway, let's see how the competition ranks in terms of maker and taker fees. I have collected data from major centralized exchanges like Binance, Kraken, Bybit, Qcoin, and Bitfinex. As you can see, Bitget pretty much operates with the same fees as its competitors. Now, if anyone wants to pay less, most exchanges insist on a VIP ranking, meaning you have to generate a ridiculously large trading volume and then you will be classified as a VIP and get some discounts. I mean, if you look at this chart from Binance, you can see how insane it can get. Anyway, Bitget has an option to have a definitive discount regardless of trading volume you generate through the discounted accounts. Discounts are something that exchanges are less and less inclined to give just like that. Fortunately, I made an agreement with Bitget over a year ago, which means that the link in the description field grants a lifetime discount for all users who sign up with it, regardless of the trading volume generated. To cut a long story short, if any of you guys have a long-term vision on either copy trading or manual trading futures on Bitget, feel free to use my link and snatch yourself a discount which is valid forever without any restrictions relating to trading volume. At the moment, the reduced percentages are 0.017% for makers and 0.051% for takers. This will put Bitget basically almost on the same level as Kraken Pro, which is pretty good. Now, I hope that there will be enough trading volume generated by the users who register with my link, because that will place me in a position to negotiate even better prices with Bitget. I would really love to see this fee pushed down to 0.014% and 0.042% respectively. I mean, that would be great to have without all this VIP bullcrap. By the way, you can check your current fee levels by going to futures information right here. And okay, that's about the maker-taker fees. Let's move on to funding. Funding fees are an expense which are not even known by a lot of users, even though it is hiding in plain sight. Funding fees are calculated from two main components, the interest and the premium. Interest is a base percentage that traders pay for leveraged positions, and that is set as 0.01% payable every 8 hours. Now, if a trader opens and closes a position within this 8-hour window, there is nothing to pay. The cost is only charged if a position is open at the end of the countdown. The premium is a modifier that keeps a healthy balance between longs and shorts. Basically, if the market is getting overly bullish on an asset, the premium turns positive and long position holders pay a fee to the traders who hold short positions. This way, they invite more shorts to the order books to anchor the futures market prices to the spot prices. When the funding rate is positive, it means that the futures price of an asset is higher than the spot price, and long position holders pay a fee to the shorters. On the flip side, if the funding fee is negative, it means that the future market is generally bearish and short positions need to pay a fee for longs. An important aspect to understand here is that this fee is not paid to Bitget. It is a peer-to-peer transaction, so whenever I see someone complaining about Bitget scamming them with the funding fees, I am sure they have no clue about how funding rates work. As the funding price heavily depends on the order book of the given exchange, it is not easy to objectively measure which exchange has the lowest prices. However, there are some interesting differences. Bitget has a pretty decent pricing. I mean, they work with 8-hour periods just as Binance, Bybit or KuCoin. The difference is with Kraken Pro, they charge users every hour and also their prices are kind of volatile. But all things considered, there is no drastic difference in the funding fees. The only thing to keep in mind is that the more balanced volume the exchange has, the lower fees usually are. Bitget is positioned quite well in this aspect, and it is also reassuring to see that they allow an 8-hour period. This is good for high-frequency traders and scalpers. And finally, we have the spread. This is the difference between the highest unfulfilled buy order and the lowest unfulfilled sell order. You might have noticed that as soon as you open, let's say, a long trade, your position starts immediately in red. That is because the lowest selling price is higher than the highest buying price in the order book. Running a quick calculation here, these are the spreads in the markets. As you can see, Bitget scores pretty well here. I mean, there is not much difference when we are talking about 3 digits after the leading zero, but Kraken and Bitfinex are definitely coming in expensive compared to the others. So that's it for the future trades. As I see it, Bitget is not ripping me off. They are well positioned in the market in terms of pricing. Of course, it is close to impossible to come close to Binance's rates, but all things considered, I don't feel like I'm taken for a ride here. The fees in the spot trading are yet another category. There are 2 factors that I must consider here, one being the transaction fee and the other one is the spread. Now, the transaction fees are pretty standard. They are usually around 0.1% for each transaction. This can get reduced by 20% if you pay the fees with BGB, Bitget's native token. The same story goes for Binance and KuCoin as well. Yet again, Bitget is placed among the least expensive, which is good to see. To reduce the costs, I can simply buy some BGB and I immediately get a discounted fee structure. It's enough to hold just a minimal amount and you're good to go. No VIP levers are necessary here either. Apart from reducing costs with the exchange token, every now and then there are some promotions where the spot exchange fees are completely reduced to 0. This was the case with Bitget last year when the bear market was hitting hard. They tried to make it easier for the users by eliminating all fees relating to spot trades. So that was a nice move. Thanks, Bitget. The spread is basically non-existent with all exchanges when we are talking about BTC. However, once we step into the category of low market cap coins, the order books can get quite thin, and that can cause some gaps between the highest buying and lowest selling prices. Again, the spread is something that is mostly an effect of users trading on the exchange. Bitget does not take any profits from this. Okay, finally, we have Onramping. One of my favorite features of Bitget is that I can convert my fiat money into crypto totally free of charge. They have a very good on-ramping solution that makes it available for me to transfer euros directly to a bank account which is tied to my Bitget account. Therefore, whatever amount I send there will end up on the exchange instantaneously as long as I send it during active banking hours. So as you can see in this comparison, Bitget and Kraken Pro are the only ones which have this completely free solution. But when we are talking about card fees, on the other hand, are really expensive on Bitget. So here Bitget comes up on top, but not in the best way. I understand that there are several layers of every bank card transaction and that the fiat money gets charged every step of the way, but if a smaller European exchange like Bitpanda can keep the prices at 1.5%, I don't see how others cannot. So yeah, I'm not using this option like ever. Alright guys, this is all about the fees. I'm glad to see that in comparison Bitget is not really ripping me off. In fact, they are being modest with their pricing. Obviously, there is room for improvement. I mean, I wouldn't mind if the maker-taker fees would be lower, but I also understand that that is almost their only income when it comes to futures trading, so I'm okay with that for the time being. Charges on the spot transactions are absolutely alright, and the fees relating to on-ramping, well, bank transfers are free, but card purchases are horrible on the other hand. I hope you guys liked the video and now you know how your accounts are being charged and how that is positioned among competitor exchanges. Let me know in the comments if there's something specific you would like me to cover in the next video. Until then, don't pay too much fees. Big money out.